Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go over market conditions and ratios, show you how things are moving, seeing if our investments are making progress against other assets. This is what measures value, and it also measures money flows of how money's flowing in the market, what assets it's preferring, and whatnot. So I'll go over the dollar, the 10-year yield, and a bunch of different ratios to show you how things are lining up. So let's dive in. We got the dollar. Again, the dollar, I think, is coming up to a resistance area where we could potentially pull back. Big picture view, you can almost run this all the way back. You could even, let me see if I can just, this is planned. That's if we were to go that way. But you could also run it, get off logarithmic here, run it this way. And that's kind of how I've been running it. And we've got this trend line coming through here where we're basically retesting all this stuff. We've got another retest there where we could potentially head lower. We could go higher as well. I mean, there's a lot of inflation around the world, and the DXY is a relative index. It's relative to other currencies. So it is possible that the dollar continues to go higher, but I just don't see that being the likely case as more and more countries start selling commodities outside of dollars. I think this dollar is, its days are limited. And we're right up against that resistance line. And hopefully I drew that resistance line. Yeah, it was pretty good drawing. So we're right up against that resistance line. Looking at the 10-year yield, again, we've been rocketing higher. I said this in 2020 that I believe interest rates will go up and that interest rates will be the driver of the rotation of money. We've gone and broken out of this long-term trend line, and I'm using the tops of all these guys as my, and I cut through this one. So I cut through the top. Now, some people draw it differently. You can also draw it where you come and you come off the top here and you say that we haven't broken out yet. But I think what we have, based off of drawing it on the major resistance line. So I do think it's a new shift to increasing interest rate environment. I think money flows are going to change where the money is going to start to rotate into commodities and prefer precious metals, commodities, and real estate over regular stocks and bonds. What's worked for the past 40 years is going into a paradigm shift where it may not work the same way. Bonds may go into a long decline in terms of their value, and precious metals could go into a new, basically, shift or paradigm shift to a higher pricing regime. Looking at commodities themselves, commodities have done a very incredible move, and we are still coming up against all-time, well, 52-week highs. I don't think they're all-time highs. Let me look back out. Yeah, it's not all-time highs, but coming up into 52-week highs. I don't see a scenario where we don't break this, this all-time high and go far higher than all-time highs. But we're coming up. We are making a gigantic first leg. This is what I consider to be a first leg move. We'll probably get a pullback somewhere, and then we're going to do a huge third leg. So that's kind of what I'm expecting. Gold, just to touch on gold real quick. Gold's looking, I think, excellent. We hit our head on all-time highs here. Got a little wick. It came on back down. Going to the daily candlesticks, we're still looking quite good. And I think anywhere in this vicinity is probably going to be a decent spot to be looking for mining shares or royalty companies or whatever you like, or even physical metal. I prefer platinum in the physical form. We've got a hydrogen economy that's coming, and it's going to use copious amounts of platinum. Copious, if we decide to go that route. We can't go that route because we don't have enough platinum. But that's gold, and it's looking very solid from a long-term perspective. It's just stair steps. Get this hammer pattern or hammer time out of here. There's a couple of them coming on. So consolidation, move, consolidation, move, consolidation, and now we're starting to move higher again. Now looking at the ratios is going to tell us relative value. So let me get down there. We've got the CRB index to the S&P 500. We've broken this big long-term downtrend line. Check. That's good. We zoom in on it. This is the weekly candlesticks. We've broken out, and we go to the dailies, and we've had a little bit of a pullback, and we're continuing our up move. This is quite normal. You're going to see these pullbacks, and this could be kind of like the first leg. We get a pullback, and then we head off for a big old third leg. But right now, commodities are outperforming the S&P 500. We have broken the downtrend. We are in a new uptrend, and that uptrend is relatively young, which means that commodities have a long runway of valuation to make its way higher against stocks. And stocks are not going to like higher commodity prices as commodities are the input for most companies. So I don't see this as being positive for stocks. I think we're going to see stocks come under pressure to the downside, and is so long that we've got inflation, CRB is going to do very well. Looking at the platinum to gold ratio, we're still chugging sideways on this ratio. It has broken its downtrend line. There's the break of the pattern to the upside. It's chugging sideways. I still think that we are in ultra value land over here. It's a long-term play. I think it's going to do incredibly well, and I would be an accumulator of platinum still. Platinum to silver or platinum to palladium ratio, platinum starting to outperform palladium. I think this is kind of like a double bottom. One bottom here at 0.32, another bottom at about 0.34. And I think we're going to see this move on higher. Platinum's going to start to substitute palladium. Platinum is the superior catalyst over palladium. It does a better job. So I don't know. I don't see why people wouldn't substitute it if platinum's far cheaper than palladium. And then the platinum to silver ratio, this was looking like it was going to break. We have fallen back down, where silver's still outperforming platinum. Platinum is incredibly cheap, and I still would not sell my silver for platinum. I would just buy platinum. That's what I'm doing, and I'm going to hold on to it. And is this done going down yet? I don't know. We'll see. This has hit some pretty historical low valuations. I mean, this was 33 in 2020. And then 98. So we hit it very low in 2011 as well at 39, came back. So we'll see where this thing heads, but it looks like it wants to head lower, where silver might outperform platinum in the short term. Gold to silver ratio, silver's doing a very good job. It looks like it wants to break to the downside. So silver is hot at the moment, and it looks like it wants to roll over, where silver outperforms gold. This is good because it's showing us that the market conditions are favorable for a commodity bull market. Silver does well, platinum does well, copper does well under these types of scenarios. The palladium to silver ratio looks like silver's waxing palladium. A nice little shoulder, head, shoulder. That's going to break to the downside. Silver could do very well here. And that's why when people ask, should I swap my silver for platinum? Up to you, but I would hold on to silver. Silver's also a very good value. And I don't like getting rid of things that are very good value. I like picking things up that are incredible values. Platinum is incredibly well valued right now. If you're playing the ratio game and the physical swapping, I still prefer platinum over silver, but I will not sell my silver. And if I get good deals on silver, I'm picking it up. That's kind of my take on it. Dow Jones to the Dow Jones to gold ratio. So looking at a big picture view, it's been in this gigantic channel ever since we put the Federal Reserve into power, which is 2013. It was very stable, and then we just started getting these wild gyrations. It is actually becoming less stable with time. And what it looks like to me is we've got kind of, let me throw a trend line in here. Maybe we can see something, but it looks like we're bouncing back down and might compress, where gold will outperform the Dow Jones Industrial Average and compress the ratio lower. If we zoom in, we've got kind of this butterfly pattern that's broken to the downside. Yeah, it's come up recently. It does have a little bloody nose where this could go a little bit higher. And we're going to have these kind of impulse moves lower, a fight back, an impulse move lower, a fight back, on a stair-stepping pattern that's lower, I think, with increasing interest rates. Looking at the gold to oil ratio, we're down at 17. Oil, I think, is going to compress the living heck out of this summer. Or gold's going to take off and this ratio will remain quite constant, or oil's going to outpace gold even if gold goes up. But this looks like it wants to compress. We're relaxing. Usually you break out to the downside, you relax for a little bit. It's the cheetah that's resting because it took some good selling or buying pressure, depending on how you look at it, to get this below. So then we're going to get more buying pressure, I think, stepping in and compressing this ratio further, meaning that oil is going to do very well. Looking at the copper to gold ratio, this thing's just been moving sideways. It's been very stable. And I think eventually copper may break this like it did in the 2004 range and run. It's a possibility. And I think we have a good years ahead of us for the commodity bull market. It's not going to be measured in months. It's going to be measured in years. This was in the 2004 region, and it had a good, 2 years to go up, and then it stayed high for a couple of years, about 4 years from break to coming back down. So I threw in some other ones. This is uranium to silver ratio. This looks absolutely phenomenal for uranium. We're looking like we're turtle heading out. We've got momentum coming up. And I think if we can break to the upside here, uranium could have a monster run against silver. So uranium's looking good. Looking at the uranium to S&P 500, momentum down, momentum sideways. And it looks like it wants to break to the upside here. That's why I got the arrow. It looks like it's breaking up. Yeah, it's getting a little bit of resistance. There's a lot of resistance up here. We hit our head on it a couple of times before. And, zooming in, we're probably going to do a little retest and then another run. So uranium's looking good there. The uranium to gold ratio is looking fantastic from a long-term perspective. It's also breaking its very low ratio to the upside. You could see a massive revaluation of uranium against gold. This is one of what I think one of the best investment opportunities is uranium, because uranium priced in any other asset is cheap and it's improving to the upside for uranium, favorable uranium. Here's uranium to crude oil. Last time in like 07, it got to 2.05. We are very low at 0.5. Basically, we could do a 4 or 5x against oil. If oil's going to the moon at the same time, uranium could have an ultra bull run. Now, is it possible that it doesn't run? It's possible, but I do think under these market conditions and what's happening, that there's a high likelihood that uranium could have a monster run. So I'm going to hold on to my shares. No one's going to get them. Sorry. And I will continue to accumulate if the mining shares stay down. Looking at, we're going to do those later there. Now I'm going to go over some of these more market conditions. We've got lumber. Again, lumber had this long sideways move. It broke out, said, hey, look, I'm raising my hand. We've got something going on. Came back and did a long retest and then blew higher. Looking at the 1 year, very near term, it does look like we have a little bit of pressure to the downside selling, a little bit. Here's our little bit of pressure in the near term. I do think that this is going to remain elevated. I don't think it's going to come all the way back down here. And I think we're going to stay at high levels for a period of time. Nickel looks like it's going up again. We had this nice big breakout, and then we came back down, and now we're heading higher again. So nickel's being very resilient. Palladium this is the out of favor metal. I would not be in palladium at this time. I would prefer platinum, and I think this is going to go down and down and down and down, and probably go down to 1,000 while platinum goes to multiples of thousands. Just based off of the market conditions that we have and the substitutions. Here's Coco Futures. I like looking at these from a long-term perspective. We have a very long-term trend line up here at 3,310 or something like that. And we're sitting there moving higher, making higher lows. Wheat is going to do incredible things. We're probably going to see this stay very high. Big long-term trend line from the 1980 mark all the way forward. We broke out, consolidated, and then broke out again. Looking at it from a long-term perspective, it's consolidating. We're getting coming down and consolidating, which usually means you're going to see another big run out of it. Looking at soybeans, soybeans is also sitting on top of its all-time high pattern, and it's looking like it's making another new elevated high for soybeans. Looking at it from a kind of zoomed in, it's still sitting on top of the pattern. Everything looks okay. Nothing looks bad, looks good. And corn futures is also sitting on top of its pattern, very high, making almost all-time highs. One level, a second level, and this is going to go to a third level, where I think we're going to remain elevated and very high for corn. This is copper priced in dollars. It is all around all-time highs. Again, we're just moving higher slowly. I think it's going to continue higher slowly, and maybe it will break. We'll see. Looking at, this is the producer price index by commodities, all commodities. It's continuing to roll higher. Looking at this from a long term, you can see these large inflationary breakout periods where we had in between these consolidation periods. So this looks like a huge move here, and commodities are doing incredible things. I would not want to have my money outside of commodities, but that's me. Looking at the housing starts are still above the average. This is the driver of inflation, in my opinion. It's those new loans against new homes. There's a lot of speculation that people are talking about. House prices are going to go down. New homes are going to stop selling. It's like, you know what? I don't know. What I look at is what is. I don't try to make predictions, and we don't need to make predictions. If this starts coming back down and goes below the average of about 1.45 million, 1.5 million, we start going back down, which is going to take some time, then I will change my stance. But as of right now, we are above it. We are increasing. The permits are up at 1.89 million or something like that. So this continues to move higher. And it's going to be volatile. We're going to go up and down. We could have a little pullback as we go. But right now, I remain a bull on real estate until the data tells me otherwise. And right now, housing starts are continuing to move higher. The conditions are there for more inflation. And the house prices of existing homes continue to have record low inventories. They are moving at record fast speeds for days on the market, and the prices continue to go higher. Now, will they go higher at the same rate that they were in 2020? Probably not, but it's going to be a high rate. So home prices continue to appreciate. We've got lots of inflation in the system. This is the driver of it. This is one of the most important market condition leading indicators that I follow. So everything is in check. It still looks absolutely excellent for a commodity bull run and precious metals bull run to continue. And this is the long-term inflation rate year over year. And this thing looks like it wants to break to the upside. What does that mean? It means that we could have massively high inflation. Incredibly high. And I don't see how it's not going to go up. It's going to remain very high. And if we break out of this, we may go to a completely different inflation rate level. So again, I think that commodities are the spot to be in. The market conditions are saying so. The ratios are moving favorably. Right now, platinum's looking real cheap. I might buy some more physical platinum because it's down. And that's what I do, is I just buy what's down, and I don't try to get too pretty with it. My strategy is to accumulate physical metals. If the metal is down, I just buy it. And, uranium's looking really good from that perspective. Another ratio that I'll tie in here, I'm going to do the Baltic Dry Index. I'm going to do it compared to, let's say, gold. So this is the Baltic Dry Index to gold, and this thing looks absolutely cheap as heck down here. Some of the high moves went all the way to 14. If this were to go back to that, that means that the Baltic Dry Index could outperform gold by 14 times if it got to the historical high again. I don't know if it's going to do that, but that could be crazy if it were. So that what that means is that the shipping companies are also of very good value as I watch and look across. And I think that we have the potential to break out the Baltic Dry Index. It usually follows oil, and oil's taken off. At least that's what the correlations show. And I can do that real quick. Here's the correlation. If I pull up the Baltic Dry Index priced in dollars, well, first I'll go over this real quick. We have a resistance line, and what happened is we've hit our head on it. We broke out. We usually do a back test, which we are, and we're at that back test level. That's where it gets my attention. That's where I start to load up the retest of support. If I were to take crude oil futures and compare it, you can see how they're correlated. It depends where you start this, but you can see that they're correlated here, which means that when liquidity comes in the system, it seeks commodities. It seeks oil. Oil is one of the best inflation hedges, and it looks like the Baltic Dry Index, something also correlates with that. The demand for commodities or shipping of commodities is correlated, and it looks like when things go out of whack, we ship more things around the world. So that's what I'm looking at. I think it's highly correlated. It's got a huge runway ahead of it. So Baltic Dry Index is another one that I think looks very, very good for potential investment. Some of the shipping companies. But that's what I've got for today, guys. That's the market conditions and the ratios. Everything looks good. I mean, that's really the bulk of it. And it's moving favorably for commodities to continue to outperform. And we'll continue to monitor it each week. If you guys like the content, give me a thumbs up. Subscribe to the channel if you haven't already. And thank you for listening. This is Finding Value.